Good morning, good afternoon, good evening. Welcome back to the channel where we talk about economics and crypto and lots of other fun things. In today's video, I am only going to talk about Bitcoin, taking a look at a few charts and some things that I found on X that are just really helpful. And if you like this content, do me a favor, hit that like button, subscribe to the channel, leave a comment in the comment section, all for the algorithm. Okay, so in this video, I want to present three kind of different areas of interest for me when it comes to a bottoming of Bitcoin. And area number one was actually already hit. It was hit yesterday, excuse me. Now, does that mean that it's over? We don't need to worry about it anymore. It's going to be a V-shaped recovery, all-time high at 124,000. Bitcoin bottoming out under 115,000, and now we're off to the races. Not necessarily. I hope so. There's a possibility. Yeah. This is, again, like I said, area of interest number one. And there's two other potential targets and zones that I have in mind. And there's different arguments that would support either one. And so, first of all, what is area number one? Well, if you remember, this is a 7-year trend line dating back to the 2017 peak. So actually almost an 8-year trend line. And as you can see, I didn't quite extend it far enough. We did have a dip below, on that unemployment report in August, and what you would call perhaps in a Wyckoff reaccumulation schematic, a spring moment. I'm not entirely sure if that was the spring, and we'll look at some Wyckoff schematics here in a second. If maybe we'll see, I don't know, but I'm not surprised at all to see that Bitcoin bounced cleanly off that level. Now, the question that I have in mind, which I'm a little bit skeptical of, is does Bitcoin now have enough juice in it to, break into new all-time highs and go into price discovery, or is this just kind of going to be a rally to a lower high? Whatever the case, I am of the mindset that we are going to hit a new all-time high with Bitcoin. We're going to get into price discovery. Ethereum is going to hit a new all-time high, go into price discovery. But this is kind of some wonky price action. And just looking at where we are economically I hate to say it again, that PPI report from last week was just a wrench thrown in the system. So there's a little bit of a less solid foundation that I'm feeling we're standing on, but that's just my feelings in the moment. Don't want to go by feelings, okay? So maybe things are just going to be kind of wonky until the rate cuts. I don't know. In September. They will cut rates in September. 30 days from now. 29 days from now, excuse me. So that's potentially option number one. Option number two would be a second back test of the May peak. So we already had a back test. It was a perfect back test, a clean back test. And listen, if you were to see Bitcoin get down to $112,000, I am telling you with a lot of confidence that you should settle long there. Okay. Now low leverage because of option number three. So option number two, same deal. We do another back test of that May 2025 peak, and we bounce from there, and then we're ready to go. Now, option number three, would be a little bit lower than option number two, and that's okay. It's okay, guys. But looking at some Wyckoff reaccumulation schematics, what do you see here? You see a couple different things. You see what I would say would be a couple of different things. So first of all, the peak at $123,000. We can zoom in on that. The peak at $123,000, and then you could see ABC correction, something like that, and then a little bit of a higher high. Did we see that recently? 124.5, and then a move down. We're grinding down, and then we go a little bit lower. And this is the one that I don't think this is as likely as option B. So, and then boom, we're flirting again, but can't quite get there. And then this is the spring moment, phase C, the spring moment, where there's a lot of fear. It feels like it's going to be over. This would happen sometime in September. And then we just get ready. We go off October. We're off to the races. All right. So that is a possibility. Another reaccumulation schematic we have here would be, all right, we have another move down, unfortunately, down a little bit below that 112K peak, that May peak, a little bit below, and that would be ahead of us. And then a bounce back up top of the range, maybe $123,000. And then instead of having that spring moment, this would be the spring moment in phase B. Instead of having that spring moment, we just kind of take a creek down. That's what it's called, a creek down. Maybe we'd get down somewhere between around $114,000. But whatever the case, in the end, this is my assumption. This is my base case. Price discovery, 130s, 140,000 something Bitcoin. So those are my potential levels for entry. Option one, again, would just be that this is the bottom and we're going to work our way higher. I hope that's the case. I'd give it less than a 50% chance that that's the case, but I hope so. And then obviously option two would be a revisiting of that previous all-time high. Option three would be a move a little bit lower. Maybe we'd see a little bit under 110 for Bitcoin at some point. And then whatever the case, honestly, I really do believe what would come next would be a new all-time high. So some things to kind of give different perspective as far as on-chain analytics. We have here from On-Chain College from my newsletter a couple of days ago. Embrace the volatility. If a move from 118 down to 108 scares you, so 108 would be one of those Wyckoff reaccumulation schematics, then reread the bold three words at the beginning of this paragraph. Embrace the volatility. With the volatile and new asset like Bitcoin, we shouldn't be fearful of multiple tests to the short-term holder cost basis. That's what STHCB is during a bull market. This can mean multiple 20 to 30 to 40% corrections. At the time of today's post, the price is 115.5. At the time of making my video, it's a little over 116. Price certainty does not need to test the short-term holder cost basis at 108.5, but as a long-term investor of a volatile asset, it simply should not surprise or frighten me. Moves like that are very normal during bull markets. What makes surfing so much fun is the waves. Learn to ride the waves, not fight the waves. And so what are we seeing? What do we see from this chart is, you can see kind of the trends of the short-term holder cost basis and where we are in comparison to short-term holder cost basis. If you're wondering, this is a chart dating back since January of 2022, so keep that in mind. But you can see a lot of short-term holder not profit-taking, short-term holder selling in loss in, after that $73,000 peak in March of 2024, as we just kind of grinded around August 5th bottom of 2024, and then we start kind of a new trend up. And then, yes, of course, all right, negative time, not as fun time. We're grinding around, we're distributing, and then we bottom out April 7th, the peak of the tariff fears. And then once again, we're trending up. We haven't quite gotten to the levels that we've gotten in March of 2024 or in December of 2024. And so potentially what could come next would be a next exciting move, similar in excitement to November of 2024, or for Bitcoin, probably just similar to excitement in November of 2024. But we could very easily just bounce off of that short-term holder cost basis line, which is a little bit higher than $105,000, and be perfectly fine. So there's some thoughts on that. Now, Decode, kind of a similar mindset when it comes to fitting in with my analysis of the Wyckoff reaccumulation schematic. We have an Elliott wave update here, and it's not super exciting. What do we see here? We see kind of a completion of a fifth wave of 5 waves here, and then what comes after that would be an ABC correction down to, he says it on the chart, if you look at it, it's kind of like it's showing $103,000, but in the post he talks about somewhere around $108,000, $109,000, and so we'll see that. But an ABC correction, and then this kind of next leg up, the Bitcoin extended fifth wave. So let's see what he says here. Bitcoin Elliott wave update. The high time frame trend remains strong, and the macro picture suggests we still have further to go. So I remain overall bullish, and I'm sticking with the idea of an extended fifth wave. I'm seeing a lot of ending diagonals in my feed drawn from a couple different points. A lot of people just saying they're bearish. However, the moves highlighted in orange are impulsive structures. So that idea does not work for me, nor does it align with my macro view. A leading diagonal in wave 1 position as shown here would IMO more accurately account for the impulse wave structures that we see. And it also fits well in an extended fifth wave nested as a lesser degree impulse to the prior move. A deeper correction here in a wave 2 that takes us back perhaps towards the January highs, January being $109,000, makes some sense to me, is supported by the RSI divergence story, and is also a typical seasonal market. Is also by typical seasonal market conditions. There are other available counts. Typical seasonal market conditions. We're talking about heading into September, but then October being very bullish, November being very, very bullish. There are other available counts, some more bullish, others more bearish. So let's wait and see if this ends up playing itself out. Longer term, I still expect Bitcoin to find its way upward towards 170K or thereabouts by the end of the year. So like I said, we looked at that chart, and maybe that's next, maybe not. We'll have to wait and see about that. But regardless, we are going to be, by every measure that I could point to, I don't see a reason to think that we are in the early stages of the bear market. I very much do not believe that. So he did point out some things with RSI. I just want to take a look at RSI. You can see the lower high in RSI. So you could see a peak in May of 2025. You could see another peak on July 15th of 2025. And here's that lower high in the RSI. So we did have a bearish divergence on the daily chart. Here's July 15th, higher high in the price on August 14th, excuse me. So we have a bearish divergence, which sure, maybe that'll lead us down to the January 20th peak of around $109,000 for Bitcoin. We'll see. Either way, again, very bullish for the end of the year. Now, some things that would support potentially this initial thesis, the best case scenario of just, this is a simple retest of this 7-year trend line. We got a couple things here. From Axel Adler Jr., the chart shows the share of short-term holders in realized cap orange line and its 30-day change, STH 30-day delta blue line. Now, I'm not going to read this entire tweet. Let's just look at the chart. So you can see short-term holders, 30-day flows, realized cap. And I just want to point out the waves here. You can see 2024, short-term holders were holding, and then less than 6 months, and then they started selling aggressively. And then we have, short-term holders kind of hanging around. And so during the peaks of this, of the short-term holder holdings, then that's around the time that you would think that price would stall out. And during the valleys, that's around the time that you would think that price would rebound, would bounce really hard. And so same deal here. We are now more in a valley than in a peak. But then you look at the short-term holder 30-day delta, and we're kind of in a neutral zone. So whatever the case, selling pressure does not seem to favor this idea that we would dump really hard. I mean, we're not talking about under $100,000 Bitcoin. We're just talking about an opportunity to buy the dip. And then we have from Dark Frost here, coin days destroyed. So after a sharp increase in the 30-day average coin days destroyed, we can now see that it has dropped significantly. CDD is a useful tool to gauge selling pressure, particularly from long-term holders. This indicator simply calculates the number of days Bitcoin was held before being moved. Most of the time, the older Bitcoin are moved in order to be sold. On July 23rd, the 30-day moving average CDD reached its highest level of this cycle. July 23rd, 123,000. A large amount of Bitcoin has been sold recently, yet Bitcoin has managed to hold its price quite well. The selling pressure has continued to ease throughout August and is still going lower. So you can see blue territory here. It's very low. It's much lower than before. I mean, look at from November to January, we had this big kind of wave here. And then you can see just the 30-day moving average rising dramatically. So it's in a much lower point right now in terms of coin days destroyed. That's a good sign, again, that selling pressure is much lower at this point than it was at the peak. At the peak when Bitcoin hit $123,000. So what does that mean? That means that there's some hope, perhaps, There's some hope that this right here yesterday, was the bottom. Again, I would say less than 50% chance that this was the bottom. I just tend to think, maybe I'm wrong, but we're going to have like a month, maybe a month of grinding, and then we'll see what happens after that. So I know it's been a brutal market. Oh man, it's been brutal. But hey, one thing that's been working in our favor, Bitcoin dominance is very much trending in our favor. So maybe can we hope and pray that it's not going to be as rough for altcoins if we do see Bitcoin get under 110K. But I think there's a pot of gold at the end of this rainbow, or a light at the end of the tunnel. So patience. I know. All right. Anyway, that is all I have for today. I hope you have a wonderful day, a wonderful rest of your week, and I will certainly be seeing you in another video. Peace.